When we're trying to grow wealth, when should a client actually loop an accountant in? What's the ideal time?
At the beginning, and start with the end in mind, not just taking that next step, because again, where we see clients get hamstrung is not thinking about steps 2, 3 and 4.
So what are your philosophies around property buying and how do you use this with your client?
I've seen a lot of strategies online when it comes to property. Look, all strategies can work, but my personal philosophy is that I prefer to let the market do the hard work and not me. So I personally prefer to buy existing properties and just hold it for a long period of time. And I just know it works.
Talking about creating wealth, generational wealth, what should parents actually be thinking of?
One, when do we want to give money to the kids? The other component is, back to estate planning. And then also things like insurance, that there's a need for it, particularly when you're building wealth. And then as we have wealth, we can then scale it back down.
Go slow to go fast, and we'll get there. Doesn't matter how long it takes, but we'll get there safely, and it won't stunt your growth. It will keep you moving forward. Hey everybody, welcome to this episode of Finance This Property That. We have Jess Giandomenico.
Yay!
Got it right, second time. From her new company now, Vesta.
Yes.
It wasn't there last time, was it?
No,
Episode 40?
I think I just launched it. So we've been around for a year now.
Well, we were episode 40.
Yes.
And I'm up to episode 86. So it's like 46 episodes ago.
Wow.
So that's a while.
Time's flown.
Yeah. Yeah. Well, I thought I'd get Jess on today as part of my bigger buyers agent network. I want to talk about a couple of myths, right? The key thing we want to go on. Most people think buying a property is the hard part. Jess and I both know that that's not the hardest part. The hardest part is everything that you do before you even sign the contract.
Correct, yes.
So 3 key talking points that we want to go through today. Why a buyer's agent and a finance strategist need to work together before anything. Missing out on off-market, pre-market opportunities. Why does that happen? And really important one that I'm seeing more and more from clients just winging it without getting advice is the due diligence that most investors that skip that will actually cost you more down the track.
Yep.
Sound good?
Sounds perfect.
Before we get into it,
Mm-hmm.
how's the new business going? How you
Going
been?
really well. So yeah, we're almost a year. I think we're a year in 2 weeks' time. So
Okay, so it's been
it has flown by. I've just put on my first team member, Chloe. So she started about a month ago now. She's doing amazing and has been a really big help to me and to our clients, because obviously doing everything on your own is quite difficult.
It is. It gets to a point where you just can't.
Yeah, and logistically, because we cover Brisbane and we buy investment in Toowoomba, trying to be everywhere at once was, it was definitely at a point where I needed to put somebody on. So it has been amazing having Chloe on board now.
And what's her role exactly?
So she is a buyer's agent associate.
Yep.
So she's working alongside me, and her main role is sourcing properties and that due diligence piece, which we'll talk about, which she's learning at the moment. So she's already found 2 properties that we've ended up securing for clients. Definitely been a big asset.
Cool. And that's like all that time and work that you're sort of delegating.
Yeah.
Sometimes in business it's who, not how.
Exactly.
And it gets to a point. Yeah, it may be painful. I remember hiring my first staff member. It was like, oh gosh, it's going to be slow for us for a hot minute, but it's actually worth it.
100%. And I think we've already really hit the ground running as a team. But yeah, definitely really valuable for our clients to have 2 people working for them rather than just me.
Yeah, it allows you to have a bit of a break sometimes too.
Exactly, a little bit of a breather, which is nice.
Yeah, can't wait till next week. How are the renos?
Good. So we just finished our bathroom. So we did an ensuite and we've done a walk-in wardrobe. I say we, it's mostly my partner. He's done a lot of the stuff that we could do or he could do himself. Obviously had trades in, but yeah, we've just finished. So happy days.
Yeah.
Less dust.
Yeah, less dust. Now you got to do the yard, right?
Yeah, so we're going to do some stuff outside. It's never ending.
Oh, yeah.
He wants to do a retaining wall. It's just, forever.
Yeah. My handyman skills are very famous. I have a drill and that's about it.
Perfect.
Yeah,
outsource.
Yeah. Let's get into
work
it.
Smarter, not harder.
Yeah, exactly. Well, let's do the stuff that we're actually good at.
Yes.
Let's talk about that.
Perfect.
Hey, look. So let's talk about a little bit about what you're seeing at the moment, right? Between what breaks down, I guess, when a buyer's agent or, you know, either the broker or whoever they're doing their finance just operate by themselves.
Yeah.
Without talking. What are some things you're seeing?
Becomes very complicated and really clunky, and it's clunky for the client. And when we're working in these professional capacities, we should be making that process as smooth as possible for the client. So if we're not talking to each other across the two industries, it's really not going to work. It doesn't help the client. I find the biggest thing is that communication piece, and maybe not on, say, on the finance side, them not clarifying to the client exactly what their numbers look like, or not making sure that they understand what those numbers actually look like. Sometimes it can be a little bit too high level. So if we're not working together, there can be a really big breakdown in the process. But when we do work together, it can be really smooth. The client understands that we're a team, we've got each other's back, and that we're both across what their strategy is going to be.
Yeah. So how are you finding out in your initial process? Like, how do you know if they're either not ready, almost ready, or they're actually, like, what are the differences that you look out for?
Yeah. So we have a discovery call at the start. So that's kind of the first, I guess, step of, you know, engaging with the client before they actually onboard with us. So during that meeting, so we either do that in person or we can do a video call depending on how busy they are. We go through absolutely everything. So obviously we're talking about the property side and what they want to buy, where they want to, you know, what suburbs they're focused on, but we also do talk about where they're at with their finance. So are they actually speaking to a mortgage broker? And have they spoken to a mortgage broker recently? Sometimes you talk to people and they're working from numbers from a year ago when they first started looking.
Been 2 rate rises since then.
Yeah, it's just not the same. So it's finding out if they're actually in current conversations with that broker or the bank. We obviously like when they work with a broker, it gives them more options. But finding out exactly where they're at. And then when they do engage with us is also having that same conversation with the broker directly to see exactly where they're at, what their conditions need to be. You know, can we do a short finance clause? Can we do a short settlement? Can we be flexible on those terms? Because that's really important when we go to offer. And
that is key, you know, understanding and having the conversation, a two-way conversation. Is key. Have you, I just thought, you know, you just said something about, you know, you prefer people to go through a broker as opposed to bank. Like, how many of your clients go direct to bank at the moment?
I don't think there's many now. I think most people do work with a broker, and it's for that reason, to get as many options as possible and not having to do that heavy lifting themselves, which is why you go to a professional.
Yeah, I think also, like, as the further you go, like, being the more you hear other brokers' names, the more you can see how every different broker operates. You know, there's a difference between being a broker and actually a strategist. Like, there's absolute
100%.
key. I think I never, ever send anyone to any of my referral partners until we actually have a strategy in play. And I don't know what other people do. I don't care.
Yeah.
But the way we do it is it's fully done. It's literally I've done the application bar submitting the application because we've done so much research. And when we're presenting it to you, these are the numbers. And I can literally go, hey, Jess, thanks for looking after this client. Here are the parameters. They could, and you can just go, yeah, call it. We'll send you the strategy report. Hey, Jess, here are the numbers. Really conservative on the rent. So if it's higher, great.
Yeah.
No worries. They've got the deposit. We can do this. We can probably push to this. But because of the way we want to structure these deals, if we can stay here, it's great. But if it's a really good deal, we'll make it work.
And that makes a huge difference for us. When the client's coming to us and you're working with them, then we know exactly where we stand. We know exactly how far we can push it. We know how we're going to offer. We know how we're going to negotiate on that because we know our limits, and that makes a huge difference. And when everybody's clear across the finance strategy, it's so much smoother.
And even to the point where if you need to the point where we've already selected the lenders, and if there are certain lenders and we can just go, yeah, you can go 7-day
Yeah.
finance. I already know that that's going to be
Yeah.
this, and that, and this is the way they look at it. Unless it's like, and I can just say, look, unless you're buying in the middle of nowhere, that's the only thing that's going to change. And you probably have an idea most of the time. I probably want to look at these areas, and you could probably in your research. And this is what some buyers agents do. They go, hey, we're looking at these these suburbs. Any issues? And either Ferry or Craig can just do the research on the postcode piece, because we don't take it to the postcode because we don't know where the property is going to be bought.
Exactly.
But generally, if it's in a big area, like in a city, pretty easy.
That's where that communication does really help. Like if we're actually speaking to each other on behalf of the client, then you can do those checks for us. It makes it so much simpler if we can go, okay, does this area work for them? Yes or no for their finance? Cool. We can just move forward. And it just makes the process so much quicker for everybody, which is great.
And even better, when we have our property plan coming, we can literally just go, hey, we've actually done a full strategy session. Here's the finance strategy. Here's the potential property strategy. And here are the parameters of the property strategy. And these are the real reasons why. And then it actually tells you when we could potentially buy our next property. So it's like, great, you bought property 1. Who do you reckon is going to get property 2, right? It's just that working relationship, because they already know, like, and trust you. They know, like, and trust us. And it's just simple. It creates a way where we're protecting the client. We've got some assumptions, got the finance, got the property strategy. Here are the assumptions. This is how it moves you closer to your goal.
Yes. Yeah.
Rather than you just, here's the finance strategy, here are the numbers, and you're just buying a property. And how do you even know that property is going to get them close to the goal they want to achieve?
Exactly. And
that's not really your job, but like it's like, oh, you just told me to find a property.
Yeah.
But if we can make it better, how much like, oh yeah, cool. They listen to my finance. They listen to my property. Buyers agents now listening and executing.
Exactly. And the more information we have, the more clear we are on that goal. It's a smooth process. Everybody understands, and they can move quicker to buy that next one.
Have you had recently any clients like say, yeah, we're ready. You go and put the offer in, and then it's turned to custard?
Thankfully, no.
That's good.
But that is because of all the work that we do up front.
Yeah.
So because of, those conversations that we have before they're even onboarded, no. But I have in the past where, they've been direct with a bank who said that, yes, they could do this lending. And when they got under contract, the bank was like, actually, no, we can't do that for you. And then it's been a scramble to get them with a mortgage broker and to get that finance. But no, thankfully, we have our process pretty down pat to make sure that that doesn't happen, because that is the most heartbreaking thing you can do to a client.
That's no Hail Marys.
Yeah.
But I think that's also setting the expectation right at the beginning, right? Because I think if you're not ready, that's leading to our next real big talking point. Notice that you've had quite a few successful off-market, pre-market opportunities.
Yeah.
What type of clients are you putting into these off-market, pre-market opportunities?
Yeah, so pretty across the board. I work a lot with first-time investors, first-time buyers, young families. So it is pretty across the board that we're finding off-market opportunities. And I will say the off-market opportunities, it's a bit of a cycle. Sometimes you go through a phase where everything that's coming in off-market isn't that great. But we, we go through lots of different tactics to find the good ones. I will say at the moment, what's coming through the discussions I'm having with agents, they're actually really good right now. And that's due to what's happening in the market. So we've gotten some amazing off markets, and it just means that for the client, less competition.
Well, you can't really, I'm thinking bigger picture here. Like if a client's not ready, you can't give them that opportunity.
No.
So the cost of not being ready and properly ready
missing out
is like hundreds of thousands of dollars over the lifespan of an investment.
Yeah.
Like, what's your typical rough typical terms on your off-market purchases?
For the contract?
Yeah, for the contract, yeah.
So we can be a little bit, like if we need to go, have longer terms or, put in a few more conditions, that's the time to do it with an off market because we're not worried about somebody else coming in and, getting an offer accepted over us. But typically, and this is on market and off market as well, like 7-day terms seems to be pretty typical for now. So anybody that's putting in or has to put in, longer terms than that is really difficult. But as a bare minimum, we're talking finance, building and pest. And if you're buying in a strata complex, a body corporate record search.
Yeah. I think with a lot of my clients, I'm seeing they're putting down 7-day finance, but they're borrowing under trust. And that's simply like, you can do it. I'm telling you that it's not. But a lot of them are organised. I know we're going to get the finance. It's the time.
Yeah.
Like we can be as perfect as we want.
Yeah.
A lot of these lenders, like, there's a very big lender that does trust lending and there's a couple of smaller ones. There is no escalation. Tough titties.
How long would that typically take?
One was 11 business days.
Oh, wow. Yeah.
The bigger one was 11 business days. The smaller ones are around about 6 business days to approval plus 2 more business days to formal. So about 8 business days.
Yeah.
Now, that's if you've got everything perfect.
Yeah. And do people have everything perfect?
No, not people. Broker has to submit perfect.
Right. Yeah.
So this is what we do one-touch approvals for. Like we've got so many. Like we're getting, these ones are getting approved. There's less hoops to jump around. We just know what they need and we're just being organised. But this is the conversation that you have to have with the buyer's agent and the buyer's agent needs to have with us really early before you sign the contract. Hey, we know we're going to get this.
Yeah.
This is the address. We're going to buy in this. We already know the client's going to buy in the entity. This is the approximate rental income. Here's the rental appraisal. Here's this.
Yes.
Like they're helping us be organised. Because even though it's a 7-day finance, if I get it 2 days before the 7-day finance starts, my team's already ready to submit. We can't submit it without the executed contract. But basically, we can have it ready to go and ready to hand over, make sure we get the contract, but we never hand over without reading the contract, making sure it's all spelt correctly. Even though that's not really our job, we just need to make sure it's there.
It's having another set of eyes on it as well. So that's really valuable for your clients.
Well, we had a SMSF buying commercial property and it was lot 11 and lot 12 or something along. There were 2 lots in the one title.
Yeah.
You can't do that with an SMSF. It's got to be 2 contracts.
Yeah.
But we picked it up.
Wow.
Agent didn't know anything.
Yeah.
So you have 2 contracts, 2 bare trusts.
And this is why people need to work with professionals, because if they're they get then through the process and then it becomes a huge issue.
Yeah.
So just having you look at the contract, which like you said, that's not your job.
Well, that wasn't me. That was Craig.
Yeah. Okay. Craig, thank you.
Yeah, Craig, good work.
Amazing work.
Yeah.
But having somebody that knows what they're actually looking at is so helpful, even if that's not particularly his job.
Yeah, because this is where you make or break the deal, right? If the faster we can move,
yeah,
the quicker we can secure it. It's good for the client, number 1. It's good for you, number 2. Good for the agent, number 3, and overall it's good for the seller, right?
Exactly. Like
everyone
we all
wins.
want these things to go through.
Yeah.
So let's try and make that as efficient as possible.
Yeah, and even with the people that we sort of have to massage, like, hey, look, it's going to be 8 business days. You're not going to get it done in 7. We're very clear. And we also communicate with the solicitor, just going, hey, guys, I'm telling you, you're going to need to get an extension, but we don't need an extension till you're ready, like it's closer to the time.
And that's really important because sometimes you need to go in really strong with your conditions to secure the contract.
Yeah.
And you hope that everything, you can be pretty certain that things are going to happen within that time. But if you do need an extension, having that communication with the agent in particular is going to really help, because if they understand what's happening before they just get notice from the solicitor, then they can talk to their seller, they can smooth it over, they can go, okay, they're going to ask for this extension, but it's because of this reason and everything else is moving forward and we understand why. So we're across it.
Because a lot of the time you'll get some sort of conditional approval, like subject to credit, no other conditions except subject to credit verification, which means that, hey, we've actually done our job right. It just moves straight through the keeper.
Yeah.
So it's like, let's get it done. But, the stuff that sometimes may hold it up, hey, look, we still need a val. Sometimes they don't do normal vals. AVM or a desktop. It'll have to be.
Are you seeing many in-person valuations at the moment?
Depends on the lender.
Yeah, okay.
Depends on the lender, depends on the LVR.
Yeah.
There have been the last two trust lends that we did with the same lender. We put their contract of sale. They wanted to do an AVM, but the AVM came in way under the contract price. So we had to then order a full val.
Yeah. Okay.
But we knew that it was going to come in it wasn't outside the deviation.
Mm-hmm.
So we kind of knew, we read the val going, oh, okay, well, we already know it's within the range. It's going to be within the range. And it came back on the dollar.
Yeah.
But we still moved the file along.
Perfect.
Yeah, we're not going to wait. We already know to a point. It is a bit of a, hey, look, I know, but I don't know.
Mm-hmm.
But yeah, they're not, look, you're going with your preferred lenders. If it's 80%, usually most of them are doing contract of sale.
Yeah. Yeah. That's what I'm
pretty
seeing
easy.
at the moment.
And really, you kind of know when we hand over the strategy, the three lenders that we're going with and the reasons why. It's like you see, one, two or three of them that are on there and you're like, oh yeah, I know I can do a 7-day. And it'll be very rare, very rare for it to come out of contract. It'll be mainly to do with the postcode or the type of property you're buying.
Yeah.
So if it's a duplex style, it'll normally have a short form val because of the risk appetite or the risk of the property, just deemed as high risk. If it's greater than 2 hectares, always going to have that. If it's a new build, it's usually not all the time, but usually will. I've seen a couple of new builds just coming at contract of sale price, because they've sold it. So, and yeah, it just depends on the asset class and the LVR, and location's also really big. Sometimes it might not be a contract, so maybe a desktop.
Yeah.
Then you send the contract of sale in. It comes in at contract anyway. Yeah. Unless there's something really weird happening. Yeah.
Yeah. Then they do need to get somebody out. But yeah, the ones that I've purchased lately, they've all been desktop, and it's just sort of shifted a little bit.
Yeah, and I think it's because the algorithm's getting smarter for the not the algorithm. It's getting more efficient. The numbers are getting more real. All the data that these lenders are pulling in from multiple sources, pretty accurate. There are some that I've questioned, going, oh, how is one lender, when we're refinancing, how's one lender doing this much, another lender doing this much? Yeah. It's a bit weird. So there are some anomalies, but never on purchases, mainly on the refis. Yeah, the anomalies.
That's interesting.
It's weird. But yeah, it is what it is. I think also, when you're doing these off-market purchases, I think the one key thing that all the good buyers agents do is around the due diligence.
Yes.
Right? So I think a lot of investors skip the due diligence they skip it or they don't understand it. And that's where, if they're not using a professional, that's the stuff that's going to cost them the most, right? What do you guys sort of what's your methodology? Because sorry, I forgot her name. Your new employee, Chloe. So Chloe's
so she started
researching.
To learn.
So what is she
started
researching?
To do the research, which is fantastic. So I guess there's stages of due diligence, and I think that's that word or phrase that gets thrown around a lot to buyers, to be like, do your due diligence, and often it doesn't get explained what that actually is.
Yeah, what is
and they're
it?
like, well, what do I need to do? So obviously, getting your finance ready, that is part of your due diligence. To know your numbers, to know what you're actually working with, setting your budget, that is part of your due diligence. Because if you're missing that step, for one, and going out and looking at properties, having no idea what you're actually looking at, what price points you should be looking at, and flying blind, that could be really costly. Or you go under contract and you have to terminate, which costs money because you're not actually quite ready. So that's kind of phase one, I guess, of due diligence. Then when it comes to working with us, we do a lot up front before we even present a property to a buyer. So there's lots of checks that we can do, mainly around the property itself and the location. So we'll look at flooding, overlays, zoning, pre or post war, what are the surrounding zones, that location specific stuff, to make sure that this is actually a suitable property for them, which is a lot of what Chloe's learning at the moment. And then I guess the next phase, once we've shortlisted that one, is the inspection is part of the due diligence. So making sure that we're actually looking at that properly. We're looking at the entire property and the street, and making sure, again, that it fits that client's strategy.
Interesting you say the street.
Mm-hmm.
Why the street?
It is really important when it comes to, this is for investors or owner occupiers. We want to buy properties that are going to appreciate. So when it comes to the street, we want something that presents well. We want a street. Our preferred thing is that it's predominantly owner occupied, and people take pride in where they're living, because if it is a rundown street where people aren't really caring, lawns are overgrown or it's just messy in general. New buyers, when you go to sell that property or you go to get, tenants in and the street doesn't present well, your house might present well, but the street itself, it's not going to give that. You're not going to attract quality buyers or quality tenants.
Yeah. Your neighbours have like hedges up.
Yeah.
Like the gardens haven't been mowed. There's 6 cars on the front lawn.
Exactly.
Like, I think we might pass on that. These photos look really good, but we don't need to tell you that. Yeah, this is why it's so cheap.
Yeah. So when we go through and do our inspection, a big thing that we do as well is also show the street, because that's going to show the complete picture.
And when you say show the street, do you take like video or photo?
Yeah, so we'll go and do a video, and then we do a video of the property itself as well.
Oh, that's really interesting. I've never heard of someone showing the street.
Yeah. I think it's really important.
It is. It makes sense.
Even when we're driving in, so it's so interesting now having a team member on, because you're sort of saying all of these things out loud because you're teaching. But we had a look at a property yesterday, Chloe and I, and as we were driving, so we were probably 5 minutes out from the property, and then I was pointing things out like, okay, so the shopping centre's here, so we know that that's 5-minute drive from the house, and just pointing out things as we drove to the property as well, because that's really important. How convenient is it? Is it easy to get in and out of their street? Is it going to be a place that has, lots of amenity around, or are they having to, drive a long distance to, get their shopping? So those things are really important, as well as how the street presents.
Yeah, it is. That's interesting. Yeah, because we're doing a development out at Crestmead at the moment, and because we're building the house out the back, slab goes down next week.
Oh, exciting.
But, when we're looking at house designs, garage versus carport, it's funny because you say, look at the street. Like I looked at the street and there wasn't one garage.
Yeah.
They're all carports.
Yeah.
So I'm like, yeah, I can do a carport.
Yeah.
Because it's going to save me 50 grand.
Exactly. And you're in keeping with the street.
Yeah. That's the appeal.
Because
I had Mark Kierpal on here talking about developments and, making sure the development actually fits the area, like the product fits the area that you're actually trying to do.
And that's a big thing that we talk to investors about, is looking at the suburb, but also that property within the suburb, within that street, is it in keeping with it? So if you're looking at a suburb that's predominantly character homes, those really, nice, pretty cottages and Queenslanders, and then you're looking at the one modern house, that's not what people that are attracted to that suburb are looking for. So it may not be the best investment. So it's also, again, part of the due diligence. It's looking at those things. So what are people that are wanting to be in that suburb? What are they looking for?
Yeah. And you mentioned the finance piece, it starts with the strategy. Like, everyone's got their roles to play in due diligence. And I guess the other thing that's helped once the contract's signed is the disclosure. So you've got basically 3 or 2 sets of eyes.
Yep.
You've got the physical eyes going over the property and the street. And, you also your overlays and things like that. Then you've got the technical eyes of the solicitor, if you've got a good solicitor.
Yeah.
And I really recommend getting a proper solicitor.
Yeah, 100%.
Look, those conveyancing, like little conveyancing groups, they do well. But when shit hits the fan.
Exactly. When things get complicated or it's a complex contract, that's when you want, professionals on your team. That's what you're paying for.
Pay for the advice.
Exactly.
Holy crap. This is like a $800,000 to $1 million investment.
Yeah.
What's 1,500, 20 grand?
100%.
Oh,
and I always
God.
say that I don't recommend going, when you're talking about the legal side, so the contract side of your property purchase, that is very important to get right. And I wouldn't recommend going for the cheapest option.
It's never going for the cheapest. It's just like free is never free.
No, free could cost
gonna
you a lot of money.
It's going to cost you $1 million.
Yeah, yeah.
Right, potentially.
Well, especially with where property prices are currently, you're spending a lot of money regardless of what you buy. Even if you're buying a unit to, you know, a family home, you're spending a lot of money. So you want to make sure that you're not going to make those mistakes or miss something, or, you know, and then it's going to cost you a lot more down the track.
It baffles me. I get it. If you're an investor and you're listening to this and you think free is free, it is not free. If you want really good, tangible advice that's going to move you forward, get you closer to where you want to be safely, quickly, right? And I guess with no BS, you pay for the advice. You pay for people that are specialists in their roles. That includes your buyer's agent, your solicitor, your build and pest inspector.
Big
Oh
one.
my God. I went with someone because they're $150 cheaper, but looking at the report, your solicitor's picked up, hey, what about these, and these?
We see some absolutely terrible reports. So we saw one the other day. It was a couple of pages. It had only photos, no commentary, and that was it. Like, that was the building and pest report. Like, how does that provide the buyer with any information?
I could open up Microsoft Word, put a couple of photos in there and do it.
Exactly. And people don't know they're not builders. They don't know what they're looking at.
No.
So,
And this is why you get a good group of people around you, right? Like the contacts. Then, you know, obviously you've got your property manager. Holy moly.
Yeah.
Cheap.
Hard to get a good one.
No, luckily
And
I know some good ones.
Amazing property manager is worth every dollar you spend.
Because they're the ones that keep your investment going and growing and tell you and
They're
your
the
eyes
ones
and
that
ears.
are actually seeing it.
Yeah.
They're the ones that are actually seeing how the tenants are living and looking after the property.
Hmm.
And they're the ones that are going to keep you on the front foot with maintenance, with, you know, when you need to increase the rent, when you maybe don't need to increase the rent. Like, things like that are going to be really, really important ongoing.
I think it's having that, again, I've just talked about, you know, basically what's your team even look like?
Yeah.
You're not getting a free team.
No. Yeah.
You're paying somewhere along
And
the line.
everybody in that team is so important for their part of the process.
And that's all they should be doing.
Yes, 100%.
They should be you work on property management, you work on finding the property, I'll work on the finance.
Yeah.
And, you know, even in my industry, like the myth, you know, you can go get free stuff. It's not necessarily going to be free's great. I love free stuff, but I want the right free stuff.
Yeah, exactly.
You know? It's like it's got to be valuable. And a strategy versus a loan, they're two different things.
Yep.
You buy a house without an actual purpose. Have you really done your job?
Yeah. And that's what I say to clients all the time, because obviously in the market we're in right now, people have a lot of questions. And it's no matter what the market is, to be honest, but there's always a question around, like, is now the perfect time to buy? And it's like, are you ready? Are you financially ready? And then 2, do you actually have a strategy and a goal in place for this property purchase? Because those 2 things need to happen before you do anything. And as soon as you do have those 2 things, then yes, move forward, and that is the right time for you. But if you're just buying something for the sake of buying, which we've seen a lot over the last few years, obviously property prices are going up and people are just trying to get in as soon as possible. Understand, but also making some choices around what they buy. That's not the best decision either. Like, don't just buy for the sake of it. It has to have a purpose.
I think this is that whole, that's really expensive. Yeah, but where are you getting the information? I just did my research. Like, yeah, but you're not really in property.
Yeah.
Like, have you actually gone and done the real research? Yes, everyone wants the best price when they're selling, right? And that's cool. But that's why you hire a buyer's agent to actually, you're the independent. Just like I'm the independent with the finance. Like, my job's to get you the right finance to make sure we don't stop. Your job is to get you the right property for the right price with the right terms to build the portfolio.
Exactly. And when you're on the ground in the market day after day, you get a really clear understanding of what's happening. When you're, going to, a couple of properties on a Saturday, like, yes, you are seeing some portion of the market, but you're not seeing the whole picture, or you're reading some, news articles or seeing some headlines. It is hard because a lot of it is contradictory. So we, on Saturday, just gone actually, I wanted to take Chloe to some auctions. And so we kind of chose a few in between our inspections. And this is where it's really important to be on the ground actually looking at things, because we went to tried to go to 3 auctions. Every single one passed in. Only 1 out of the 3 had a registered bidder.
Yeah.
Because everybody right now wants to put a finance clause in, so an auction isn't the most popular thing. So then what we can then put to our clients is go, okay, because of some, how some of our clients, how their finance is structured, maybe an auction isn't the best option for them. So we've been, ruling those ones out. Now we can go, okay, we're going to watch these auctions. And if that does happen, where they get passed in because there's a bit of, uncertainty in the market with clients buying cash unconditional, we'll watch them. And then that could be actually a good opportunity for you. So it's just knowing what's happening and pivoting with what the market's doing. You can really only do that if you're in the market.
Yeah, you got to be ready.
You've got to be ready. You've got to be there.
Yeah. Mate, look, thanks for coming on again. I know it's been a year, so we shouldn't really wait another year for it to happen again. Bit slack, but that's okay. That's on that's on me. As always, the information on this podcast is very general in nature. It doesn't take into consideration your personal circumstances. If you want to talk about property, Jess, very easy to find. How can people find you?
I am on Instagram, Jessica Giandomenico _Vesta, or you can find me on LinkedIn or our website, Vesta.
Still haven't shortened that handle.
I know. It's everybody just needs to learn to spell my last name. Or our website, vestaba.com.au.
Yeah, awesome. And if you want to talk about finance, pretty easy to find at Dion Finance Specialist. Much easier to
long
type
name.
out. Yeah, but easy. Emergefinance.com.au. I'm on LinkedIn. Pretty easy to find. And look, again, we've got plenty of great information from professionals in other episodes. Jess was been on episode 40. Very different conversation. Go back and listen to all those other episodes as well. But until next time, see you then.